So to start off, what's your outlook and how are you positioned when you think about value versus growth?
Sure. I think in the last couple of years, my funds have tilted a little more value. I try to manage them in kind of a large cap core box, but the opportunities I've seen over the last couple of years have been tilted more to the value side. And so when I look 3 to 5 years out, I try to look at a combination of both earnings growth and yield, as well as the multiples that I'm paying for stocks. And right now, I think we've been in a market environment where the value parts of the market have not seen the same multiple expansion as the more growth-oriented parts of the market. The growth area has been phenomenal for the last 10 years, really, but really picked up in the last three or four. Tech has been a huge driver of that, and these are phenomenal companies, a lot of them. They're generating a lot of earnings growth with great cash flow, some of these companies. But I think when you look at the market construct and environment that we're in right now, quantitative easing has led to an abundance of capital in the market at a capital cost that's very low. And so a lot of these companies are taking advantage of that, which is intelligent and smart, to really drive earnings growth. But it's also leading to valuation expansions that I think are getting to the point where there's probably not much more left to run on that piece of the actual total shareholder return.
And you mentioned the tech stocks, which are trading at very stretched multiples. Can you talk a little bit about how you feel about the drivers of the tech rally recently, the FANG stocks?
These are companies that the consumer loves, and a lot of them are generating very fast revenue growth. Pieces of the FANG stocks are very profitable, generating lots of free cash flow right now. The question on those companies is not really, are these going to be profitable models in the future? It's going to be how profitable are they going to be, and how long can they sustain the actual growth trajectories? What type of multiple are you going to put on these companies if maybe growth is going to slow over the next 3 to 5 years?
And can we talk a little bit about like the Facebook and Google, which are in one group there, and you mentioned that right now they have 30% of the...
So those two companies have done a fabulous job penetrating the online advertising market. They're about, call it, online advertising is, call it, 35% of global advertising, coming from almost 0 10 years ago. So they've taken a lot of share in this market. I think a lot of advertisers are going where eyeballs are, and you've seen these companies do a great job finding new users and being able to monetize the user base. The question now is, if you look at kind of what the consensus or first call estimates are for the revenue growth of some of these companies 3 to 5 years out in the future, the online advertising space to hit these estimates needs to basically move to almost half, if not more, of the overall global advertising market. And I just think it's going to be a harder ask for these companies to generate that type of growth at this size than they have been able to do the last 10 years.
And on the other side, the Amazon and the Netflix, what would it take for them to sustain these multiples?
That's a great question. I think quantitative easing is a big part of it, and the low rate environment and the cost of capital environment has been very helpful to companies where the operating models are not yet proven. I think we have to look out 5 to 10 years before we really see the type of free cash flow margins and operating margins that these companies are going to be able to generate. I think at that point in time, there'll be something for traditional value investors or large parts of the market to actually sink their teeth into and try to value these companies. I think we either have to see growth slow or a different cost of capital environment. Until then, I'm not really sure what's going to make these companies and the market change the way that they value them.